This is CA Rekha. In today's session, I'll be taking you through what are the different types of opinion that is given by the auditor, how it is expressed in an audit report. So, modifications to the opinion and in an independent auditor's report. So, this covers your SA 705. So, in the previous session, if you remember, I have already taken you through SA 700. That is an audit report. What are the basic elements in an audit report, and there we were dealing with a unmodified opinion, or when the auditor is not giving any qualifications. So we were dealing with the unmodified opinion part. So today we will see what is a modified report. So what are the different types of opinion and how it is expressed in a report. So basically just to give a recap, I have already given you about the total flow. Audit report, so basically I can divide the audit report into two parts with respect to opinion, unmodified and modified report. So in our unmodified report, we already saw like what are the basic components and how the audit opinion is expressed in the opinion paragraph. Now coming to the modified report. So this is a modification. There is some kind of a qualification that is given by the auditor. So auditor feels that the financial statements are not representing a true and fair view, or there are some kind of misstatements in the financial statement. So in such a case, the auditor might give a modified report. So now basically if you want to classify the modified report, I can classify it as to one part with respect to the opinion. Opinion in the sense, there are three types of opinion, basically modified, qualified opinion, adverse opinion and disclaimer of opinion. Now, this each and every opinion will be going in detail when and what under what circumstance the auditor gives such an opinion. Now, so coming to the next part, it is about the emphasis of matter and other matter paragraph, which we have already covered while covering the components of the audit report. So here we will go a little bit elaborate on what each of that means with examples, and also what is the key audit matters. So how it is different from the emphasis of matter paragraph. So now we'll go to the session. We'll start on with the session. So circumstance. So under what circumstance the auditor gives a modified opinion? That is a qualification. So when does the auditor come up with reservations or qualifications? That is the first thing that we have to see. So as I told you, in an unmodified opinion or a clean report, auditor feels that the financial statements of the entity represent a true and fair view of the entity. So there is no material misstatements. So everything is clean. So he gives a clean report or without any qualification. So such a kind of report is called as unmodified report. Now coming to this part. So this part is with respect to modifications. So when an auditor feels there is some kind of a issue, there is some kind of a material misstatement, there it is not representing a true and fair view of the entity, then the auditor has to clearly express his opinion in the audit report by giving a modified opinion. So when certain circumstances are encountered by the auditor, so we feel that the financial statements are not representing a true and fair view of the entity, and the misstatements are material in nature. So in such cases, he will go on with giving a modified opinion. So now we'll see under what circumstance. That is the main objective. We saw the objective, that is giving a modified opinion, appropriate modified opinion whenever the auditor feels that the financial statements are materially misstated. Now under what circumstance when the auditor gives such an opinion? So basically there are two elements in this. One is, as I told you, the financial statements are not free from material misstatement. So there are misstatements which are material in nature. Material means what? It affects the opinion of the users of financial statement. So in that case also he might give a modified opinion. Or second is a very important element, because this might be confusing depending on what type of opinion the auditor is giving. Unable to obtain sufficient and appropriate audit evidence. So it need not only be when there is a material misstatement. So when he is not able to get any sufficient and appropriate audit evidence, he is not able to obtain the required audit evidence. In such case also, the auditor might give a modified opinion. So there are two elements of this. So under what circumstance the auditor gives a modified opinion? One is when there are material misstatements. That means it affects the decision of the users of financial statement. That is one part. Second part is he is not able to obtain any sufficient and appropriate audit evidence. So this is the second part of the circumstance. So we'll based on this, we have three different types of opinion. Now, these are the circumstances under which the auditor will give. Now, there are few factors which also affect the modified type of opinion or the type of modified opinion that is being given by the auditor. So, the first factor is materiality of misstatement. So, materiality of misstatement means what? There is some kind of an error or misstatement. That means the financial figures are misstated, wrongly stated. It could be either, as we all studied in the previous sessions, it could be either because of fraud or maybe because of error. So unintentional or intentional. Now, if this particular misstatement or this particular element which is stated wrongly, if it influences the decision of the users of financial statement, then I can tell it is a material in nature. So first factor that is affecting the type of modified opinion, which type of modified opinion the auditor is giving. The first factor is materiality of the misstatement. Now coming to the next one. Next one is pervasiveness. So we'll actually deal with pervasiveness a little elaborately in the upcoming slides. So pervasiveness is how that particular element or particular misstatement is affecting the financials. Is it having a effect only restricted to one or two elements or account heads, or it is affecting the financial statement as a whole? So depending on how the effect is it only to one particular portion or it is affecting the entire financial? So depending on that, the next point will be pervasiveness. So first we dealt with materiality, second is pervasiveness, third one is audit evidence. So audit evidence here refers to whether the auditor is able to obtain audit evidence or not. Say if the auditor is able to obtain audit evidence, then also if the financials of the company are materially misstated, he can give a modified opinion. Sometimes he might not obtain sufficient and appropriate audit evidence. In such cases also, there are few circumstances when he gives a modified opinion. So in that we have two different types of opinion, qualified and disclaimer, that we will see in the upcoming slides how each of them are different from each other. Now, so basically there are three factors that is affecting what type of modified opinion the auditor is giving. So before going on to the type, these are the factors. One is materiality, one is pervasiveness, and one is audit evidence. Now, once I show you the tabular column, like how each and every opinion is based on each of these factors, then it will be very clear how each of the factors are affecting the type of modified opinion. First one is, before going to that, we'll just discuss what are the different types of modified opinion. So, first one is a qualified opinion, then we have an adverse opinion, then we have a disclaimer of opinion. Okay. So now before going into the technical terms that is associated with each of these opinion, we'll take a real-time example and then correlate this with this particular opinion. So okay, different opinions. So now you would have seen like a lot of movies, I mean during lockdown or before lockdown, so n number of movies you have seen. Now whenever you see a movie, normally it's a practice that okay, whatever movie we get, we just switch on and just watch it. Sometimes we might be choosy. We sometimes go see the reviews, especially when we are going to the theaters to watch a movie. Mostly we'll be going with respect to the reviews. We just don't go to all the movies. It will be based on the reviews. So now if you ask me about the reviews, certain movies you find a 4.5 or 5 rating. IMDb rating, or maybe the rating given by different newspapers, it could be a 5 rating or 4.5. Now, 5 rating means what? They have an excellent cast, their script is too good, very good director, or the songs are very good, good choreography. As a whole, the movie is a full-time entertainer and it's a blockbuster, some kind of a record breaker movie. For such kind of movies, you give a full rating. Now, same thing you can actually correlate in an audit environment. If you feel the books are prepared, it is completely giving a true and fair view of the entity, there is no kind of misstatement, the auditor can give a reasonable assurance about the fairness of the financial statements. In such a case, the auditor can give a unmodified report or unmodified opinion that can be expressed through a report. So that is your unmodified report. Now, again, coming to the next part. Next part is, say for example, some movie, again that movie, some other movie, you are just observing the review for the movie, and you find that the review is just 3.5. 3.5, but it's not a very negative review either, but not a very good review, excellent review also. So now when you see the review 3.5, maybe you will just see why it is given 3.5 review. It might be because the cast is not good, all newcomers are there, might be the script is not good, or the first portion of the movie is too good, second portion of the movie is a bit lag. There is a lag in the second portion. So after the interval, so as a whole, the movie is only an average. It's not like too good, neither too bad. So such kind of movies, they might give a review of 3.5 on 5. Now, again convert it to an audit environment. So why I'm telling this is it will be better for you to correlate. In the audit environment, you are verifying the books of accounts. You find that there are some misstatements. There are few misstatements in the entity, the books of accounts, and these misstatements are material. These are significant ones, and if these misstatements are there, it might affect the decision of the users of the financial statement too. But they are not pervasive. They are not pervasive means it is only restricted to one or two account heads or one or two elements. It is not actually having a full-blown effect in your financial statements. Okay, it is not affecting your financial statements as a whole. So the financial health of the company is still good, but what happens is there are few misstatements which needs to be corrected and it is material in nature, but not pervasive. Such kind of situations where the misstatements are material but not pervasive, you give a qualified opinion. So when do we give a qualified opinion? We can see a qualified opinion will be given when the auditor has obtained. So here again, very careful, one element that what you have to observe is qualified opinion can be given when the auditor obtains evidence as well as when the auditor is not having or not obtaining sufficient and appropriate audit evidence. So sometimes you might be confused, like when the auditor is not getting enough evidence, then he might directly give a disclaimer of opinion. No. When the auditor is obtaining evidence and evidence is sufficient and appropriate, but still he finds there are misstatements in the particular financials, which either like it could be individual misstatements or together it represents a material one. It is material in nature, but it is not pervasive. It is not affecting the entire financials. It is restricted to one particular account head or element. So such case also he can give a qualified opinion. So this case, be very careful. It is he has obtained sufficient and appropriate audit evidence and the misstatements are material but not pervasive. Now, he hasn't obtained any audit evidence. He is he has applied all the audit procedures, but he hasn't obtained any audit evidence based on which he can give his opinion or he can reach his conclusions and he can give it through a report. Now, there is no kind of audit evidence obtained. In such a case also, the auditor can give a qualified opinion if he feels, or if through his auditor's judgment, the auditor understands that the material misstatements, whatever if any could be there, is material but it is not again pervasive. So he is not sure like whether there are material misstatements, but if material misstatements are there, that again will only be material but not pervasive. So auditor has got that kind of a confirmation with regard to that. In his judgment, he feels that any material misstatement, if it could be there, it could be material but again not pervasive. So here very important, either the auditor can obtain evidence or the auditor may not obtain evidence. In both the cases, if he obtains sufficient and appropriate evidence and if he doesn't obtain sufficient and appropriate evidence also, One thing that you have to remember is the material misstatements, either that is already there individually or aggregate, or material misstatements that could be there as per the auditor's judgment. In both the cases, it will be material, but it will not be pervasive. It will not affect the financial statements as a whole. It will not have a pervasive effect, but it will have a significant effect with respect to the decision of the users. That is, it will be material. So be very clear, because this point might be confusing depending on what questions are being asked. Sometimes you directly jump on to the conclusion and give a opinion as it will be disclaimer. No, it might not be disclaimer. So whenever audit evidence is not obtained, don't always say it will be a disclaimer of opinion. It could also be a qualified opinion. In such case, check about the misstatement nature of the misstatement, material and not pervasive. It is always qualified. Clear? Now, coming to the next part, adverse of opinion. So we have already seen the rating that is given as 3.5. Now there is another rating that is being for another movie. You are seeing or observing the verifying the ratings, and you find that the rating is 1 or maybe 0.5 either. Okay, 0.5 or 1. Now seeing the review comments, you find that 1 or 0.5 rating, you need not actually go into the comment section, because the film is a flop. The film is a flop, and either the cast is very bad or the direction is very poor. Film doesn't have a proper story, it just revolves around few characters and few songs here and there. It's not watch worthy. So such kind of film, there are lots of mistakes and there are lots of things or points for improvement. And so such a movie, like once if they have directed it with such kind of better cast or better script, it would have been better. So now as such the movie is a failure, it is a flop, it is not good for watching. So you don't have to actually go to the theater and watch the movie. So it is such kind of a movie. No, in such cases, I have already told you it is 1. Now, same thing you can actually match it with a real-time audit scenario. In an audit scenario, you verify the financials. Then the financials you feel, or you on verification, you understand that the books of accounts or the books of accounts are materially misstated. Materially misstated, I told you what is material misstatement means. They are materially misstated, and also not only these misstatements are material but also pervasive. It is not restricted to one particular account head. It is affecting the entire financial. So in such cases, the auditor will go for an opinion which is called as adverse opinion. So this is the adverse opinion. So auditor shall express an adverse opinion when the auditor has obtained sufficient and appropriate audit evidence and concludes that the misstatements, either it could be individually or maybe together, small misstatements together, it represents a material value. Both it could be material and pervasive. So remember, it is material and pervasive. If it is only material but not pervasive, then you give only a qualified opinion, adverse opinion. Now this is like very much what to say, you have misstatements and you can never give a qualified opinion. There are so many misstatements which needs to be fixed before the auditor can give an qualified. So this kind of a scenario, you give a adverse, very negative opinion or an adverse opinion. Now, third kind of opinion is called as a disclaimer of opinion. So what is disclaimer of an opinion? Sorry. So disclaimer of an opinion means, say for example, say movie rating. Again, we'll come to the movie rating. You are searching for a particular movie, and in that website you see the movie ratings of different movies. And now this one particular movie, you have you're browsing one particular name of a movie and you find there are no ratings at all. It's like as if nobody has known that film has already been released. So such kind of movies are also there where people are not even aware the movie has already been released or not. So this kind of a situation, again, we can correlate with an audit environment. When the auditor feels, or when the auditor is unable to obtain sufficient and appropriate audit evidence. So there should be some rating there. Here there is no rating. Not only there is no rating, people are even unaware. Even most of the websites, it's not even listed, this film. So such kind of an environment where the auditor is unable to obtain sufficient and appropriate audit evidence, he might have performed all the audit procedures required, but still he is not able to give a proper opinion. He is not able to obtain sufficient and appropriate audit evidence. In such cases, when the auditor again sees what is the effect of these, what is the effect on the possible effect on the financial statement. So once he understands the effect on the financial statements and he finds out that it could both be these undetected misstatements, because there is no audit evidence obtained here. So these undetected misstatements could be both material and pervasive. So it could be material in one way as well as it could be pervasive. So here the main point is unable to obtain sufficient and appropriate audit evidence. It could be both material as well as pervasive. So what happens is, very rare circumstances these happens, and there are many uncertainties are there. He is not able to come to a conclusion because there is no proper audit evidence obtained. So even corroborating different kinds of documents and records, and the auditor feels that there is some kind of a fraud, or there is some kind of a these financial statements are goofed up, some kind of a issue with the financials, because of which, even though there is no misstatements that is visibly there, but there could be material misstatements, and there could be misstatements which could be both material as well as pervasive. Now, such a situation, the auditor gives a kind of report called as a disclaimer of opinion, or disclaimer of opinion, which you can give through a report. Now, the important aspect is, what is the difference between a qualified and a disclaimer of opinion? Qualified opinion is also given when you are unable to obtain sufficient and appropriate audit evidence. But the difference is, in a qualified opinion, even though you are not able to obtain sufficient and appropriate audit evidence, in the auditor's judgment, the undetected misstatements could only be material but not pervasive. Material but not pervasive for qualified. But in disclaimer of opinion, even though he is not able to obtain sufficient and appropriate evidence, in the judgment of the auditor, these misstatements could be material and pervasive. So it is material and pervasive. There it is material but not pervasive. So this is a basic difference. So whenever a question is asked with regard to what is a disclaimer of opinion, or under what situation or when the auditor is unable to obtain sufficient and appropriate audit evidence, what type of opinion is given by the auditor? Say you get a question like that. Check what is the type of misstatement involved. It is not always disclaimer. Check for the type of misstatement involved. So that is the first thing. So we already saw three types of opinion. One is qualified, one is adverse, and one is disclaimer of opinion. So in the previous session also we covered what is unmodified opinion. Now, all these places we have been discussing a term called as pervasive and materiality, right? So materiality, I already told you when a particular amount is considered to be material. Say it depends from company to company or entity to entity. One particular amount or transaction which might be material for a particular entity might not be material for the another. So say for example, amount of 5 lakh, it might be material for one particular organization, but for another particular organization it might not be material. So it depends on the total turnover, total revenue, and few other considerations with regard to the entity, and also the judgment of the auditor. Now, second part is pervasiveness. What is pervasiveness? So we use the word whenever the audit opinion is given. This particular factor is always taken into account. Pervasiveness. So what is a pervasive? What is called as being pervasive? So pervasiveness or pervasive effect means, say for example, there is some kind of a transaction which is not really affecting that particular account head, but it will also be having some kind of a effect throughout the financial, not restricted to one particular element, one particular amount, or one particular item in the financial, but it is representing it is having a cascading effect on the entire financial. So such kind of a effect is called as a pervasive effect. Say for example, your inventory is misstated. So this most of the cases it might be only a material amount. The amount involved is material but need not be pervasive, because it might not affect the other elements or other account heads or the entire financial statement as a whole. But sometimes there are certain elements which is having a Pervasive effect. Say for example, there is a defalcation of cash. Not a very exact example, but I'm telling you, defalcation of cash is there. So if, say for example, this is done by a accounts executive or the person who is entering the books of accounts, entering the account. So now, say for example, a defalcation of cash of 1 lakh is involved, or maybe 50, say 1 lakh is involved. Now what happens is, he might actually adjust the books accordingly to make sure this amount is not shown anywhere in the books. He has taken it for his personal use. Now, this might not have a pervasive effect because he might change 1 or 2 entries and then leave. But say for example, this particular act is done by a person at a very senior level, a key managerial person. Say for example, a CEO, CFO. It may not be 1 lakh also, it might be higher amount. Now, when it is done by a key managerial person, this might not have an effect only on one element, cash in your balance sheet. It might have various ways because he might not only change that particular entry with, he might manipulate the accounts too. So it depends on what kind of effect you have on the financials with respect to a particular transaction. So it is not always affecting one particular element, it affects the entire financials. Now, sometimes even if it restricted to one particular element, say for example, your balance sheet is having only 3 elements, your capital on the liability side and you're having a fixed assets and cash. Now, very few elements, and cash is like, say, just for it's a nominal value for the cash, and majority is with respect to the fixed assets. So most of the whatever capital is employed is put in fixed assets. Now, in such a case, if you find there is some kind of a material misstatement with respect to a fixed asset, even though it is restricted to one particular element, it is representing a substantial portion of your financials. It is not just one particular element. You are not having a number of bifurcations in your financials. So in such cases, even though it is restricted to one particular element, since it represents a substantial portion of your financial, it could have a pervasive effect. It could have a cascading effect throughout your financial. So such cases also, it comes under a pervasive effect. So pervasive effect means it need not be always confined to specific elements. So first basic definition is, it is not confined to specific elements or items or any account head within the financials. Second is, even if it is confined to any particular element or account head, that particular account head or that particular element could represent a substantial portion of the financial statement. So then in that case also you say it has a pervasive effect. Sometimes it may not be like with respect to elements or account heads. It could be with relation to disclosure also. So disclosures is not proper with respect to the understanding of the financials. So no proper disclosures are given. In such case also, you can say it is having a pervasive effect. So pervasive effect means it is not confined to certain elements or certain items of the financials. It has a cascading effect. It affects the financials as a whole. Sometimes even if it is confined to 1 or 2 elements in a financial, it is representing that 1 or 2 elements will represent a substantial portion of your financial. So in the example I have given, it is with respect to, there are basically 3 elements and this 1 element is representing a substantial portion. So any misstatement in that particular element could have a negative effect, or it could have a cascading effect on your overall financial. So that is the thing. And the last one is with respect to disclosure. So in disclosures, they are fundamental for understanding of the financial statement. So when there is any kind of misstatement or any kind with respect to the disclosures, in relation to the disclosures, then also it will have a pervasive effect. So this is what you mean by pervasiveness. Now I've just made a chart for you, like this is for a very quick understanding of the different types of opinion and what circumstance each of the type of opinion is given, and what is the materiality and the pervasiveness involved in each of them. So as I told you, qualified opinion given when audit evidence is obtained as well as when audit evidence is not obtained. When it is obtained, it is given when the particular misstatements are material, but it is not pervasive. It is not pervasive. Now, qualified opinion could also be given when the audit evidence is not obtained. Be very sure, like it is not obtained. But again, Your misstatements are material but not pervasive. Now, third one is your disclaimer of opinion. So, disclaimer of opinion I can give. Auditor gives only when no audit evidence is obtained. Clearly, no audit evidence is obtained, but your misstatements are material and pervasive. Both it is affecting, it is significant and affecting the financials as a whole, has a cascading effect. Now, last one is with respect to adverse opinion. When the audit evidence is obtained, you are obtaining audit evidence, you have the ratings, as I told you in the example, you have the ratings, you have the opinion, you have the audit evidence obtained, but misstatements are there and these misstatements are material as well as pervasive. So material and pervasive. So in such a case, you can give adverse of opinion. So sometimes the question can be there. When the material misstatement is both material and pervasive, what kind of opinion would you give? Directly don't jump into a conclusion of adverse. See whether audit evidence is obtained or not. If audit evidence is obtained, it will be adverse. If it is not, it will again be disclaimer. Or audit evidence is not obtained. What kind of opinion would you give? In such a case, it is given or with reference to audit evidence obtained. Now check whether whatever misstatement you find out is material or pervasive. If it is material and pervasive, it will be disclaimer. If it is only material, it will be qualified. So this chart, just focus on this. Everything is actually summarized in one chart. So it will be easy for your last minute revisions. Now, as I told you in the previous session, every in a report, the opinion paragraph will be followed by another paragraph called as basis of opinion paragraph, basis for opinion. So what is the what are the factors or what is the reason why you have given such an opinion? So now, bringing the same concept here, whenever you are giving an unmodified opinion, say adverse, a disclaimer, or qualified opinion, your opinion paragraph should be followed by another paragraph called as basis for opinion paragraph. Now here, same thing, only thing is you have to amend the heading basis for opinion paragraph as basis for qualified opinion or maybe adverse opinion or basis for disclaimer of opinion, as the case may be, and give the reasons for giving such a kind of opinion. So that is the only change with respect to the audit report part. So all the other opinion will definitely change and also your basis for opinion will also change. So these two things, remember, these are the modifications or these are the changes with respect to the report. With respect to the opinion, we have already discussed few types of opinion. Now, with this actually we can close the session. Actually the session with respect to modified opinion is over. Now just for a quick recap, audit report, two types of report can be given, unmodified and modified. Unmodified, there are different types of opinion, modified, qualified, adverse as well as disclaimer. And also there are two other elements which we will be discussing in the next session with respect to emphasis and other matter paragraph. Now, under what circumstance the auditor is giving? So when it is not free from material misstatement and he is unable to obtain sufficient audit evidence, or it could be or any one circumstance he can give. Now, what are the factors affecting the type of modified opinion? We saw three factors in the tabular column. Remember, three factors were there. One is whether audit evidence is obtained. Second is if material misstatements are there, whether it is material or pervasive. Now, so three factors are materiality, pervasiveness and audit evidence. Then type of audit evidence, we saw qualified, adverse and the disclaimer. Qualified, we saw either it could be the case when you obtain evidence or it could be when you don't obtain evidence. In both the cases, the auditor either concludes there are misstatements or there are undetected misstatements, but it could be both. It could be material but not pervasive. Not both, it could be material but not pervasive. In adverse of opinion, the auditor is able to obtain sufficient and appropriate audit evidence and he feels the audit evidence that he is obtained is proving that there are misstatements which is both material as well as pervasive. Now, last one is a disclaimer of opinion. So, in disclaimer of opinion, the auditor is unable to obtain any audit evidence. So, inability to obtain audit evidence even after performing all the audit procedure, or it could be because of limitation of the scope of audit. For some reason, the auditor is not able to obtain a audit evidence, sufficient and appropriate audit evidence. In such case, when there are misstatements, if it is both material and pervasive and no audit evidence is obtained, you give a disclaimer of opinion. So this is a very rare circumstance when auditor gives a disclaimer of opinion. Now, next one is we discuss what is meant by pervasiveness. So it is not confined to one element or one particular item. Even if it is confined to one particular element or item, this will represent a substantial portion of your financials, or it could be with relation to disclosures, improper disclosures, and it is having a cascading effect on your financial. It is affecting the financials as a whole. So such case also you give a pervasive opinion. Then we saw a tabular column with respect to different types of opinion and with respect to whether audit evidence is obtained, whether it is material, and with respect to the pervasiveness. And finally, for conclusion, we saw what is the addition to your auditor's report. That is, you have your basis for opinion paragraph added in addition to the changed opinion or modified opinion. So here we will be seeing what are the, how you have to include that as basis of qualified opinion, and the basis for, what is the basis for, instead of basis for opinion, we modify it as basis for qualified opinion, or basis for adverse opinion, or basis for a disclaimer of opinion. And underneath we will be giving the reasons why the auditor has taken, or what are the conclusions reached by the auditor to give such a kind of opinion. It could be disclaimer, adverse, or qualified. So this summarizes your modified opinion and the modifications to the report. So this comes under SA 706. So in the next session we will be dealing with the other two parts here, emphasis of matter and other matter paragraph, and also key audit matters. So how key audit matters is different from emphasis of matter paragraph, and what is why other matter paragraphs are included in additional to the audit report, like opinion given in the audit report. So we'll see in the next session. So till then, just go through this. We'll see with the next session on these few topics. Thank you.